want to welcome everyone to the video for job order costing. Job order costing is for unique type products, such as what we have in this example, wedding cakes. Another would be wedding invitations. But for manufacturing, we also could have G-pads, tank heads. I worked in a foundry, and we did job order costing for that because it was very specific in what they wanted, and you didn't want to produce those ahead of time. Okay, so a lot of this is going to be journal entries that you keep track of. So to record a purchase of raw materials, this is what we have on the first one. We have a company called Cakes Delight Incorporated. They purchased on June 1st $6,000 worth of raw materials on account. So we would debit material inventory. Okay, for the $6,000. And we credit the accounts payable that was on account, and that's for $6,000. All we did there was purchase the material. No big deal there. Okay. Then on May 15th, Cakes Delight received an order for a wedding cake to be delivered on June 16th. We assigned the job number 205 to the On June 10th, the material was requisitioned. Material requisition was sent to the inventory department for raw materials of $5,000. The cake also had $1,500 of indirect material that came with it. So what we have on June 1st is the work in process. And that's for job 205. I think that's what we said. Yes. Okay. And that is for the $5,000. Now the indirect materials will go into factory overhead. And that's for the $1,500. And then the material inventory account. Now some places will call this raw material inventory. Others will just say material inventory. I'm just going to call it material inventory because that's what I called it up above. But raw material inventory is just as correct. And that would be for the $6,500. Okay. Then on June 14th, we had time tickets. We billed $7,500 of direct labor was used for job 205. And the actual indirect labor was $1,000. Okay. Anytime you have direct materials, direct labor, you put it into work in process. That's the account we use for everything in job 205. And that was for $7,500. So direct labor and direct material both go into work in process. Indirect labor or indirect materials will go into factory overhead. So, and that was for the $1,000. And then we have wages payable for $8,500. Okay. Now overhead is applied based on a predetermined rate. Assume 120% of direct labor costs. Okay. Applied overhead also goes into work in process. Work in process is it's an inventory account. That's where you keep all the costs that go into the job at. So we take the $7,500 times 1.2 because remember it was 120% of direct labor costs. And then we credit factory overhead for the $9,000. That's for the applied overhead. Now, for the actual, okay, that's the applied. The indirect expenses came totaling in at $7,000 on June 15th. Okay, so on June 15th, we had $7,000. Now, this is actual overhead. Actual overhead will be a debit to factory overhead. And that's for $7,000. And we credit, I always use various accounts. The reason why, because we don't know exactly what the credits will be. They may tell you what it is, but it could be things like cash, supplies, accumulated depreciation, wages payable that we used up above. It can be a lot of different things, and that's why I usually say various accounts. And if it gives you specifically what it is, normally this would be the credit you normally credit. Your expense, like if it's depreciation, you'd normally debit depreciation expense. But in this case, it's factory overhead. And your credit is accumulated depreciation. That's what would go in there. Okay, so if you know what the account is for the credit, you go ahead and put that in. Otherwise, various accounts is what we use. Okay, now to transfer this to finished goods, we have to look at what is in the work in process. So we want to debit the finished goods inventory because we're assuming we're finished with it. Okay, now to get this, you can have a T account for it, but equal, we look at the work in process for this job 205. We have the 5,000 plus the 7,500 plus the 9,000. So we have $21,500. And we want to take it out of the work in process. And that's for the $21,500. Okay, so that's what we take it out of. And it goes in the finished goods. Now on June 16th, we delivered the cake and we sold it for, the price was $32,250. So we would credit accounts receivable. And it was quite a cake in that. And that would be for the $32,250 because that's what our selling price was. And we would credit sales for $32,250. Then we would debit cost of goods sold. This is for the cost of the cake, which was the $21,500, and we'd credit finished goods inventory for the $21,500. Okay, so now what I have here is the label account for factory overhead, what we have in here. We have a debit for $1,500, which was this one right there. That's that $1,500. Then you see we have $1,000 as a debit, so that will go here. And then we have a debit for $7,000, and we also have a credit for $9,000. But we want to see what's in the account. So this is the balance column, $1,500, and then we'll have equal $1,500 plus the $1,000 minus this credit column. It gives you $2,500. The reason why I do that is I can just simply add those down. And you notice we have a $500 debit balance in here that we need to close out. Okay, so this is what we call over-applied or under-applied. It's under-applied overhead because our debits is greater than our credit, so it's under-applied, which means we need to credit the factory overhead account. So to close it out, you debit cost of goods sold, and that's for $500, and you'll credit factory overhead. For $500. So then if we put $500 here as a credit, and we bring this down because we want to subtract credits, that gives us our zero balance. So under-applied overhead increases the cost of goods sold, which reduces the profit. Okay. Then we have, the other thing we have is you can also use activity-based costing with this. Okay, I don't think we do too much with that, but you can. For spoiled units, what we may have, normal spoilage, it's in the overhead rate already and it's charged to all the jobs. Abnormal spoilage is not expected above the acceptable rate, so you may allow, so you expense it out to loss from abnormal spoilage as a period cost. And a normal spoilage of rework is required, charged to overhead account. You charge the rework to overhead account and take it out of the materials and the direct labor payroll. And if rework is due to the job, then it's charged to the actual job. Otherwise, it's charged to just generally overhead. Okay, so we have a little quick example here. Defective units, we have cost of defective units is $19.80, may be sold for $450. $1,200 is considered normal, and spoilage is the amount above that. Okay. Balances they have normal. Okay, so what we have? So we have disposal value of defective work. Okay, and that is for the $450. That's okay, which is basically your cash when you actually sell it, but that's what we're putting. That's kind of an inventory account right now. Then factory overhead, that's our $1,200 because that's the normal spoilage part. Then we have loss from abnormal spoilage. And that is for the $330. And then work in process is for the $19.80. Okay, how I got actually the $19.80 was given. So we actually took the $19.80 minus the $450 minus the $1,200 to come up with that. Okay, try that. I hit the wrong button. $19.80 minus the $450 minus the $1,200. Okay, that's how I got the $330. Okay, that's for spoilage. Now back up here. This is what you have to do, like the journal entries, and to get this, the 21,500, we simply add up all the work in process. Like I said, you could have made a T account for it and kept track of it that way, like I did here, or you just go through and add them up. But the idea is you need to have separate jobs recorded separately. So that's why you have this job, you know what, work in process job 205. And this is what I tell them in a lot of the classroom type things, that sometimes they don't have, they just say work in process $9,000. They have several jobs to put together, but you need to be able to keep them separate sometime. Okay, because they'll ask you then, we completed jobs 205, 206, and 209. How much do you have transferred to finished goods? And if you don't have them separate, you have to go back and recalculate it. And that's why I just put the entries in separately. Okay, so I hope that helps a little bit. And that is job costing.